Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
So Nikkei also is trading with cuts of almost 0.4%. ASX 200 is seeing a sharper fall, 1% decline almost.
China and India are the primary funders of the ongoing war by continuing to purchase Russian oil.
Resistance here, 55,835 and 56,156.
We got further shocked when we then being told that, this is it that is there.
89 will be targeted by those who are worried.
So 25,150, 25,140. It's about 0.12% lower.
The imports from China have reduced significantly.
Getting done with the first 2 hours of this midweek trading session, and it is yet another down day for the index.
The consensus in this room of a large number of India CEOs is that growth is likely to be between 6.8 to 7%.
An impressive recovery that the Nifty has seen from the low. Still in the red though.
Okay, it is a sideways kind of a day. Market breadth is negative, and I think the pause continues, which began last Friday. So it's been Friday, Monday, Tuesday, and today, Wednesday, middle of the week as well. Not going anywhere after that 1,000-point move that we had from the lows. This is Closing Bell coming to you live from the CNBC-TV18 Motilal Oswal studios. Surabhi and Reema with me here. Nigel is joining us from the newsroom floors. Guys, good afternoon.
Hi, full house today.
Yeah, absolutely. So
Why is that said like a surprise?
Because we've not had it,
very
right?
busy people.
It's a full
Yeah.
It's a full house.
But today, all here, so looking good. But actually, I'll tell you what, maybe that pause doesn't hurt, a small decline doesn't hurt today because we're not alone in it. European markets have paused. Asia didn't do too much, thanks to the fact that the US Fed is now making some statements on whether asset prices, especially equity prices in the US, whether they're getting a little overheated. So I think it's kind of just put on the brakes, at least for now, guys.
Okay, and
Nigel is not interested. He's like, I don't care about the Fed.
all right, let's just take it from the top then, right? In terms of just a few things, and we'll move forward quickly. 80 points lower on the Nifty. We're about, 25,080. Which basically means what? Which means we've broken below yesterday's lowest point. Yesterday's low was 25,084. We're actually at yesterday's low right now as we speak. And that was the level that we put out in the morning in terms of a support. We'll see if it holds or not. But certainly in terms of coming off the highs, it's been kind of one way. Fourth day, fifth day? The high was fourth day. The high was made on the 18th of September. The high was 25,448. And you've basically given up about 400 points, a little over 400 points from that particular point. Nifty Bank is the other one. It's down about 0.75%. Yesterday it closed in the green. But here as well, there is some pressure which is coming here. The high recently was about 55,835. So about 750 odd points given up here. The small cap index is down 0.5%. And I think you got the mid cap index, which is also down. Mid cap index is down about 0.75%. And I think that's the reason why market breadth is negative. Just a quick teaser of what's coming up here. So markets, of course, off the lows, but of course remain lower as well. So closer to 25,100 now, slightly under it. FMCG, PSU banks or sectoral gainers. Real estate is down 2%. No particular reason that we could spot. There's a big story, and on the back of it, there is a big stock move as well. So Yash will join us shortly, insurance regulator, essentially saying commissions, distribution costs, etc., should be lower across the insurance industry. We'll talk about that in just a bit. There's Minda Corp, which is higher. It's eyeing a revenue scale up to 17,500 crore rupees and other ambitious targets as part of the 2030 target. Stocks, of course, higher. Bajaj Electricals is to acquire brand rights from UK-owned Murphy Richards. So famous brand, and stock is higher on the back of that as well. So this is looking pretty solid. Nigel?
Well, that's right. Let's get straight then to the call. The market's a little bit lower. Mitesh Thakkar joins us from Bonanza Portfolio to help us out with whether or not you should buy the dip. Hi, Mitesh. Good afternoon. Good to see you, Ben. Tell me, how do you see the market span out from here on? And will you look to buy this dip?
Good afternoon, Nigel. Well, I think, the decline has been slightly more than what I was kind of anticipating. I was hoping 25-1 comes into place. But then, we have broken below that. The indicator is still rising, which means that there's still a chance of a pullback happening, or, the market's kind of getting into an up move kind of a zone. But now we need to capture 25-150 again. So I think on the index per se, turn positive once 25-150 is being captured, and then, we can look at further upsides. Till then, I think, people who are trading the index, I think, might want to keep, things slightly quiet. And on the stock side, I have a sell on Hero Motors with a stop at about 53.30 and a target of around, a target of around 5,200 to begin with. And then maybe we'll look at some more correction happening over here. The stock has rallied and, could give a pullback. And the second stock which I have, that's a buy on Indian Bank. Keep a stop around levels of 703, and look for target of 750.
Okay, thank you very much for that. We'll reconnect. In the frontline pack, it's many of these power stocks higher in trade. So Power Grid is your top gainer. Crossed the 200-day moving average, inching towards 300. NTPC is up and about. Buying emerging in consumption names. They were down yesterday, but today on the front foot. HUL, Nestle seeing some interest. And Maruti Suzuki continues to be on everyone's buying interest. 50% up so far this year, but buy calls continue to come in. Goldman Sachs today upgraded Maruti, raised the target price to 18,900. Investec too has raised the target price to 18,500. So everyone sees more upside in Maruti Suzuki even after the run-up. IT, though, is on the back foot. And this week, the Nifty IT index is down 4.5%. But let's get to the big insurance story, and this is an exclusive. Now, IRDAI has flagged some concerns around high insurance commissions. It's pushed the stocks lower. Yash is joining in with the details.
Well, this was the first meeting which happened after the new IRDAI chairman, Mr. Ajay Seth, took over the position. Of course, it was the meeting between the chairman and the CEOs of insurance companies. And what we are given to understand from our sources is that the IRDAI chairman expressed concerns when it comes to the high distribution cost, the high commissions which go behind selling insurance policies. The chairman was of the view that, after GST changes, there's a large benefit which comes to policyholders. But if the commission cost can be lowered, if the distribution cost can be lowered, then insurance products can become more economical for policyholders. We are given to understand that the industry also in the same discussion did accept that the commission cost remains high and steps need to be taken when it comes to bringing down the commission cost. One suggestion which came from a few large insurance companies in the same meeting was also to evaluate and study the mutual fund model with respect to the total expense ratio, how the total expense ratio for mutual funds was capped, and the insurer suggesting that if some kind of capping on the mutual fund TER model can also be thought through and implemented as far as the insurance sector is concerned. What we've been given to understand that all these insurance CEOs are expected to submit a presentation to the IRDAI chairman in terms of ways in which the insurance commissions can be capped, and then it would be in the regulator's court to take that proposal forward. Also, what we've been given to understand is that the regulator, IRDAI, is expected to make subcommittees on all these strategic focus areas, out of which reducing commissions and making insurance more economical would also be a strategic focus area. And the subcommittee will also give its suggestions on capping commissions. Apart from that, as I said, many more strategic areas like enhancing the health claim servicing facility, like increasing penetration, focusing on growth, as well as commitment towards motor third party and social rural obligation were also flagged by the new IRDAI chairperson.
Just to make it clear that, by the way, the stock PB Fintech, and Yash is with us. PB Fintech was down almost 6.5–7%. It's recovered a little bit from the lows, but still down 4%. Just to make it clear, this is, it's been, it's a long-standing kind of thing. There was, of course, Bima Sugam at one point in time, and that was kind of also aimed at lowering costs, distribution, commissions, etc. But this is now a new one. I mean, Yash, this is the first time this mutual fund TER has been, I don't remember this MFTER model being talked about at all, right?
This is the first time the mutual fund TER model is being talked about and being explored by the industry. In fact, I forgot to mention one important point. One more suggestion which came in the same meeting was if insurance companies can disclose the commissions that they pay on the policy document itself. This demand has come in the past as well, but could not be taken forward. But it's come up again in the meeting with the IRDA chair.
We've reported on that. I remember we reported a couple of years ago, we reported on that, but never went anywhere. So, yeah. But again, everything, proposal, discussion, exploration, and we're just reporting to you what those things are. Nothing has been decided, and this will be taken forward. We'll keep you posted. But stock, of course, taking note of that story.
It's an important one. By the way, I mean, for PB Fintech, it's been a range-bound year, like it has been for better part of the market, the index at least. Stock is, I think down 5-6% for the year as a whole, and it is, off its peak as well. Let's discuss this and more with our first guest on the show. Sudeep Bandyopadhyay is with us. Sudeep, great to have you on. PB Fintech, never a dull moment in the insurance land, but PB has usually weathered most of these storms. It still had a big grip over the online, distribution model. How would you view this, even though it is purely a discussion at this stage, nowhere close to being an actual regulation, if there is some sort of cap on commissions?
I think this has to be a very well thought out strategy by the insurance regulator. Insurance is a different product. Mutual fund is a completely different product. While you can distribute mutual fund in a manner, the same cannot be applied directly to insurance products. It does require a certain amount of selling, and it has got certain amount of inherent costs. So, trying to replicate the model may be a bit of a challenge. The bigger question to my mind is the penetration of insurance, which is significantly lower in this country. And, pretty much everybody, whether it's a regulator or the insurance companies, should really focus on that. Of course, bringing down the cost for the general public who are the buyer of insurance product is definitely a right strategy, but it has to be calibrated and done in a very, very thought through, well thought out manner. I think this is the reason why many of the earlier proposals, including Bima Sugam, didn't really catch the fancy of the market, and it never went anywhere. So I would say I will take this with a pinch of salt. It's not so easy to bring down the costs of distribution because it does have certain amount of costs.
So are you, I mean, on the stock, sorry, Sudeep, just to understand, so on the stock, I mean, what's your call? Buy, sell, hold, or not looking at it?
PB Fintech, I'm positive. I think they have done a fantastic job. These kind of daily fluctuations will keep on happening. But if you're looking at a long-term story, I think PB Fintech is a great buy from a portfolio perspective. Insurance penetration has a long way to go. And PB Fintech is the stock if you're looking at a platform play on insurance.
Sudeep, any interest in shipping names? Because shipping stocks are in focus, and there is some buzz that at the cabinet meet later today, we could have some big announcements. So CNBC Awaaz is reporting exclusively that 3 schemes worth 70,000 crores could be unveiled for the shipping sector later today. So they include shipbuilding financial assistance, 25,000 crore, a maritime development fund, again 25,000 crore, and a shipbuilding development scheme, 20,000 crore rupees. I think some of these stocks have come off, but SCI is higher in trade. This is an Awaaz. And just last week, infrastructure status was also given to some of the large ships. Any interest in these stocks?
Well, I do like the shipyards, all 3, Mazagon Dock, Cochin Shipyard, as well as Garden Reach. I think from a long-term point of view, all 3 do look good. But you have to remember that the valuations at this stage are not cheap. So if you are buy with a long-term view. Out of the 3, if I have to buy one, I'll go for Mazagon Dock. I think it's doing pretty well, ticking all the right boxes. But the valuation is rich. That's the only challenge. So it should be bought for long term. As far as the other components of the shipping industry is concerned, I think the fundamentals need significant improvement, whether it's a SCI or the other private shipping companies. At this stage, I won't venture there. I think shipbuilding is what the focus of the government is, and I'd rather look at shipyards than the shipping companies.
Shipyards, but the valuations are on the higher side as of now. By the way, let's talk about IT, because that's a sector which continues to see selling pressure. The Nifty IT index is down 4.5% so far this week. And even today, Mastech, Coforge, Wipro, Tata Tech, Tech Mahindra, First Source, Emphasis, we're seeing cuts ranging between 1 to 3%. So there is more news on H-1B visa. Over the weekend, there was news about the H-1B visa fee going up to $100,000. Now what the proposal has come from the US Department of Homeland Security, DHS, that instead of the random lottery system, which is so far up until now used to select H-1B visas, they're proposing a weighted system. Basically, give preference to higher skilled and higher paid workers. So just to give you a context, over the last couple of years, about 80% of the H-1B visas went to level 1 and level 2 employees. These are basically your entry-level or qualified workers, and they earn a median salary of $85,000 to about $100,000 respectively. But on the other hand, the experienced workers or the fully qualified workers, which are categorized as 3 and 4, and they earn a lot more, going up to $165,000, have historically got a smaller share of visas. So therefore, under the new system, they're proposing to abolish the random system, lottery system, and give a higher weightage. There's a higher probability of level 3 and level 4. The more skilled workers, the workers who earn more, they're likely to get more visas. And according to DHS, this could bring in an estimated $500 million of economic benefit in the first year alone. As of now, it's open for comments, 30 days. And after that, I think the government will take a decision on that. So that is the latest blow. It's important because 70% of the H-1B visas have gone to Indians, not impacting the tech companies only, but even the big tech companies, consulting firms, but they do take in Indians. In fact, on this subject, earlier Shireen was moderating a panel of top India Inc. voices. Roshni Nader Malhotra of HCL Tech shared her views on the ongoing H-1B visa fee hike and its impact on India. Listen in.
I'd mentioned this before as well, that we can't let this, never miss a good crisis. And if at all, if you've seen the trend of H-1B visa applications over, let's say, even the last decade, India's the largest proportion, but the number has been coming down.
Yeah.
And a lot of conversations today that you have with your clients, and we're all pretty heavily indexed on the US, is around AI adoption and AI-led deals. This is not just a problem for the industry. It is also a problem for customers, clients, and actually some of the most biggest companies which are hit by this are actually American companies.
Yes.
Innovation and R&D plays a huge role, and also the patent ecosystem. And it's absolutely critical that for a lot of this talent, which is unable to go now to the US or is considering coming back for all these reasons, and could be other reasons as well, to continue to invest in building institutions, continue to invest in building R&D and research, and across various fields, right? I mean, I was mentioning to the Foreign Secretary earlier that sovereign technology. Each country is looking at building its own sovereign technology, whether it's in semiconductor, whether it's going to be in AI, whether it's going to be in quantum. They're actually going to be extremely exciting areas for people to come back and work in and do research in.
So, Deep, there's so much uncertainty surrounding Indian IT, but, as Roshni was saying, never waste a crisis. It throws up an opportunity. Is there an opportunity to buy Indian IT right now?
Well, I think it's better to be careful as far as large cap IT companies are concerned. Beyond this H-1B crisis, I have been talking about this entire emergence of AI. I think, beyond whatever we are talking about AI will enable the US corporates to push for reducing the cost of contracts. And that will lead to contraction of margin for Indian IT companies because they don't have their own AI products. They have to depend on third-party products to provide the necessary services. So as far as Indian large cap IT companies are concerned, I think they will face margin pressure. And we have to watch this evolving scenario very, very carefully. I do like some of the mid-cap IT companies who are providing service to niche segments like travel and tourism. Now, travel and tourism is booming, and the people who are servicing travel and tourism industry, they are expected to gain and continue to gain momentum. Similarly, there's a transition happening in automobiles from ICE to EV, and a lot of IT companies are providing service in this segment. One should focus on these niche IT service companies and start building position there. So a rate gain technologies, persistent systems, companies like that who are specialized. And these are the segments one should look at, not general IT service providers.
Rate gain? It's been a bit disappointing. I don't think the stock has done very well because it used to grow historically very well. And I think this year they've given a single-digit guidance, top-line growth guidance. So is that on your buy list at this juncture? Let's pull up a one-year chart of rate gain to see. This year it's down close to about 8% and 1 year will also come up. So they buy it this juncture?
Absolutely. In fact, I've been, talking about this company for some time, and I think it has gone through a phase where the growth was limited and the guidance also was subdued, performance also was subdued. But I think good times are going to come, and buying at current level definitely makes sense.
Sudeep, very quickly, before we let you go, today the mid-cap mover of the day by some measure, Minda Corp. This whole Vision 2030, and I think we'll have Sudarshan join in just a bit to go over the details again. But just your view on the stock, if you have one.
Well, absolutely. I do like these auto component stocks, and some of them are, transitioning with their 2030 vision into a, global player. They are, of course, doing quite a lot of good work. And you see, this transition from ICE to EV is doing wonders for many of these auto component companies because, their scope of their work for a particular automobile is increasing significantly, and that will give them a leg up going forward. So yes, Minda Corp definitely from a long-term perspective should be looked at. Look at Sambardhana, look at Uno Minda. So I think all of these, are worth looking at.
No, absolutely. Sudeep, we'll leave it there. Thank you very much. Good speaking with you. Appreciate your time here on CNBC-TV18. We take a break. 100 points now. We're down to 25,064. We take a break. We're back with Alok Agarwal on the other side. Stay tuned. Coming up. Well, welcome back. Markets are down, 100 points. So at the day's low, pretty much at the day's low right now. Let's see, the low is 25.27. We're at 25.69, 25.70 at this stage. Alok Agarwal is head of quant and fund manager at Alchemy Capital Management. Alok, good to have you back on the program. Thanks very much for joining us. So, we had a nice move up. Now we've got a bit of a downdrift, basically. So the range still stays and still awaiting triggers one way or the other for the market to do something different. And then, of course, you've got the rupee as well, which is precariously close to 80, 89. I mean, at least yesterday it was. And unless and until we get a deal quickly, as some have said, perhaps more weakness afoot. We'll see if the RBI comes in heavy. But what's your sense, Alok? Is the lift, has the lift ended that the market got, or is there more?
Yeah, hi Prashant, good afternoon. Pleasure to be here. As you hit the nail on the head, one of the key triggers that this market is possibly looking forward to is this deal getting signed between India and US. So that could be a major game changer in terms of us moving out of this range that we are seeing over the last few months. Nevertheless, a lot of steps have been taken both by the government as well as the RBI to ensure that a lot of demand push can be done. Over the last 10 months, we have actually seen the RBI doing a lot of stuff in terms of cutting the rates, cutting CRR, moving from deficit to surplus, and government too, like from a direct tax benefit of about 1 lakh crore to GST cuts. That was the most recent development. A small contribution also coming from the fact that those online gamings have been banned, so some more money possibly at the hand of the households. So demand push is definitely there. Government has been doing that part. But yes, if we can get that deal done, that could be a major victory in the near term. And that would be something that possibly could be the near-term trigger to push the markets further upwards. On the earnings front also, although we are seeing that the earning cuts in terms of estimates was there in the past few quarters, but the pace also has come down. So a lot of things are in place. But yes, that one deal is something that we are waiting for.
All right, hi, hello, good to see you. And that's going to be clearly the sentiment driver, right? Because we're doing as much as possible internally. But the big sentiment driver is going to be a India-US trade deal. But how would you approach the markets? Given that we know the deal is going to come about, it could take a month, 2 months, or maybe 3 months. But would you, look into buying all this weakness that we're seeing in the face of consolidation? Because as you said, we could probably get an RBI rate cut. The benefits of all the measures that have been taken by the central government as well will flow in the second half of the year. So how do you approach the markets from here on? You can't wait for that deal. I guess you'll have to start going in, right?
Yeah, and one has to err on the side of optimism here. So the most benefits, as you really pointed out, the most of these benefits will actually be seen in the second half of this financial year. There's case for possibly RBI for the rate cuts to come in as well. And the government is quite supportive. So that part is definitely there. And the earnings growth numbers have started coming in. Even if you look at the last quarter's numbers, the Nifty 500 earnings growth was at 10%, which in itself may not be a big number, but it is the best number we had in the last 5 quarters. The pace of earnings growth estimates cuts that has come down significantly. So we do expect that we are possibly around that turning around point wherein it's definitely more logical to be erring on the side of optimism rather than being too cautious.
So you're fully invested, Alok? And what have you all been incrementally buying as money flows in?
So structurally and the near-term basis as well, consumer discretionary broader basket is something that we are more positive on. So that traditionally consumer discretionary has included the likes of auto, retail, consumer durables, etc. But there are certain other aspects also that it's possibly has shades of consumer discretionary, may not be classified directly there. The likes of electronic manufacturing has shades of consumer discretionary. I would actually go ahead and say that savings is also like buying of consumer discretionary services. So the capital market plays comes in there, the premium real estate comes in there, even the private hospitals and travel comes in there. So a lot of those segments, and then the platform-oriented companies catering to the distribution of these. So there's a whole gamut of such companies which are catering to the rising disposable income as well as rising per capita income and the K-shaped recovery as well. So that's one area that we are more positive on. But we do also expect that this is not something that the government is trying to run the economy on one leg. apart from consumption, the investment side is also on. And within the investment side or the capex side, the defense and power are the two major areas that we are positive on.
Defense and power. Alok got that. So yeah, I mean, what you're saying completely makes sense that maybe it's not a good idea to totally look away from capex or the industrial part of the market as well. But how do you find valuations? I mean, defense stocks, they have paused and they're still many of them are still off the 52-week highs. But are they providing a good entry point? And if that, in that sense, I mean, more on the shipbuilding side or a wide conglomerate like an L&T, how are you looking to play defense?
In case of defense, I think we need to possibly zoom out a bit to look at the broader picture. And the way the defense is, we need to possibly look at the global picture first. Broadly speaking, the global GDP stands somewhere around $100 trillion. Globally, 2.5% of GDP is spent on defense. That brings us to the number of about $2.5 trillion. Even if we take about 3-4% growth in GDP, but going by the pace at which higher defense allocation is happening, it wouldn't be surprising to hit a 5-6% of GDP as a number in possibly 5-6 years. So this $2.5 trillion expenditure over the 5-7 years has the potential to possibly reach $7.5 trillion. So that's a kind of number possibly could be there in the coming years. And it's coming at a time when India has started and decided to move away from being completely import dependent to be more independent by producing in-house and also in some areas trying to export as well. So that's a much larger area. That's why it's nicer possibly to take it as a comparison to the auto sector that was there in the 90s. So initially it is the major OEMs that do very, very well. But as the ecosystem does well, expands, you'll have far more ancillaries coming in. So that's where this sector may look expensive in near-term earnings, but these cuts, this falls, there's this kind of negative returns that comes in the shorter periods. These are the times that makes us far more positive.
Thank you, Alok, for joining in. We need the positivity because markets are slipping now. It's 25,050. That intraday pullback of more than 100 points to levels above 25,100 is being sold into. Now 125 points gone on the Nifty. The day's low today was 25,027. So we're about 15 points away from that level. The mid-cap index is down close to about 1%. Small-cap index will also come up for you. The Nifty Bank is extending its loss now to 500 points. Fourth day, a weakness for our markets and profit booking. Hormus is now joining in to put the spotlight on individual movers in the market. Hormus, rates are changing very fast, but tell us what you have.
Well, what is also changing very fast is the gears on the auto ancillary stocks, and we spoke about them in the morning. Today is no different, and they are continuing with where they left off in yesterday's session. So putting the spotlight on one such name, Munjal Auto, and up 14% is the biggest single day gain since July of last year. The volumes are the highest in over 2 months. We've had more than 1 crore shares that have changed hands on Munjal Auto today compared to their 20-day average of just over 4 lakh shares, and this is now as a result of which the stock has now turned positive on a year-to-date basis after reporting its best month of the year so far, that is this month of September. The other one is Zuari Industries. Now this stock was up 10% yesterday, it's up 20 today, and it had gained a similar quantum in the month of August as well. Now the last 2 sessions the stock has jumped 31%, and today's volumes are the highest on record for the stock already. We've had more than 60 lakh shares that have traded today. 20-day average here is just over 2.5 lakh shares, and this one too has turned positive for 2025 after this 2-day advance. And since the start of 2020, at the end of 2019, the stock was around 50 rupees. It's up almost 8x from those levels. Now, we spoke about one Tata Group name in the morning. The other Tata Group name that has been buzzing over the last 2 days is Tata Investment, and this one is too up around 25% in the last 2 trading sessions. It has fixed the record date for its stock split, which is the 14th of October. And the last 2 sessions, the stock has had more than 50 lakh shares being traded in the stock, and 33 lakh of those have come in today's session itself. The 20-day average is just 1 lakh. In comparison to 1 lakh, we have had close to 33 lakh shares being traded. This one too has turned positive on a year-to-date basis, and since the start of 2020, the stock was around 900 rupees. Today, it's closing in on 9,000 rupees. And Paradeep Phosphates is the last name on the list today. Snapped a 2-day losing streak, up 10% in today's session. The volumes are at the highest in 2 months. We have had more than 3.5 crore shares that have been traded in today's session already. The 20-day average around about 65 to 70 lakh shares. And as a result of this move, the stock has traded above its 100 DMA of 180, and the 50 DMA on the upside comes up to around 199. Although despite this move, the stock has been an underperformer this month, but an outperformer on a year-to-date basis, gains of over 70%.
Okay, Armas, thanks a lot for that. Well, it's time for our favorite segment, D Street Chatter. Nimesh joins in to tell us what is he picking up. Nimesh, some weakness is what we're seeing on the index, but I don't think people are still very, very worried because we're down 130 points at the day's low. Brother, I think people are taking it as par for the course.
Yeah, absolutely, Nigel, and not much from a flow perspective as well. So it's kind of a muted day of trade, not big participation coming in. I guess the next big trigger would be, of course, the expiry next week and the RBI policy. That's something a lot of chatter has already started talking about, and maybe that's the reason why you have to focus on the rate sensitives. Today, for instance, the reality index is down 2%. The banks are also under pressure, but I guess the street seems to be a bit divided at this point in time on whether we're going to see a rate cut or not. So that's going to be a big trigger as far as the Indian markets are concerned. Technically, on the downside, 24,950 is a level to watch. If that gets taken out, you might see some further pressure. But as you rightly pointed out, not much panic, so to speak.
Yeah.
I guess even from a PCR point of view, we normally bounce back from 0.7 to 0.75. So maybe a pullback could be on the cards and short covering. But from a buying perspective, it lacks a bit of buying for sure from large institutions today.
Well, indeed. The other trigger that we'll cover in just a bit is the India VIX is still cooled off, on a day that the markets are down. But what about individual stocks? What are you picking up?
Okay, so the first second list is Paradeep Phosphate. Hormuz did highlight about the trading activity. But I guess that today's pullback is largely because I understand there is a clean out trade from a domestic mutual fund. They have been aggressive sellers in the last couple of days. That's the reason why the stock was under pressure. But after today's clean out trade, you've seen a big vertical move and up 10% in today's market. So that's the first stock. The second stock is Polycab, under pressure today, but of late it's been consolidating. But again, there is an indication of a large block coming in Polycab very soon. So that's the buzz there. The third name is Ethos. That's up 2%. It's generally a illiquid stock, but I understand some bit of interest is back from institutions, and one domestic mutual fund seems to be an active buyer there. And the last one is Himadri Chemicals. Even that stock is buzzing in trade after a large block. 1% equity got changed hands today. And I understand one of the corporate body corporates, they were the sellers in today's block deal. So any disclosures that could be interesting as far as Himadri Chemical is concerned.
Nimesh, just one, I don't know if you have any intel on this IMCO, right?
Yeah.
EIMCO, 14...
EMCO Elecon.
EMCO, yeah, I mean, it's for what, 14% down today. The recent high was 2,300, 2,350, 1,730 now.
Yeah. So Prashant, today the stock is down because of the OFS, which was announced, and one of the foreign promoter, which owns 24%, they are looking to sell their entire 24% stake via OFS, and it's at a deep discount, right? The floor price is 31%. Of course, it's not necessary that the deal will happen at 31% discount, but today is a day for the institutions to participate. So today's closing would be very important as far as what's the cutoff for the retail investors tomorrow. It's a small, I mean, though it's 24% in terms of number of shares, it's a small one of 14 lakh odd shares. So from a interest point of view, Prashant, whatever I spoke to, the feedback is that some family offices are interested in this OFS, so they're going to bid for. Some domestic PMS are going to bid for. No large institution, mutual fund investor or mutual fund was likely to bid. That was the early morning feedback. If things change, I don't know, but that's the sense as far as the interest is concerned. But need to see as to what price the cutoff comes in for retail investors tomorrow to participate in the OFS.
I see. Got that. Very interesting. Thanks very much for that, Nimesh. That's a list of stocks to keep an eye out on as we sort of march towards the end of trade. What 10, 20 minutes to go. We'll take another quick commercial break here. What to buy or sell today for a reverse trade when we come back tomorrow? Just a bit.
Welcome back. Nigel is now moved over to the F&O desk with the latest trends on what's happening in the derivatives market.
Well, that's right, Rima. You know, the markets are down, but still doesn't seem to be any kind of reason to panic. And the reason I say that is, you know, the Nifty is lower, but the VIX as well hasn't spiked up. And that normally is an indication that maybe there's no real panic, at least that is now set in. Moving to the options data, then you have a bit of a strategy that's playing out. That's writing the 25,100 put and the 25,100 call as well. It's known as the short straddle. You pocket a premium of close to around 300 rupees and you hope that the Nifty stays in this band. So, you know, if you just, if this is the strategy, then on the downside, the 24,800 level is the important support. While on the upside, the 25,400 level, that's the important mark. So if the strategy is playing out, then this 600-point band is extremely important. Moving to stocks that are in focus, well, you're seeing some kind of unwinding on IRDA today. The stock had a bit of a run-up. That's coming for profit taking. But the bigger unwinding actually is having on the stock delivery. Massive, you know, downtick is what we're seeing on the stock with the equivalent amount of open interest shedding as well. On fresh buying side, we are seeing PSUs that are back in focus, and you have a good amount of open interest build up on NTPC. The stock is high, open interest as well as higher. And finally, you know, Oro Pharma. That's a stock that's seeing considerable amount of shorting in today's trading session. The stock is down 2% and the shorts are building in. But finally, RBL Bank, I've been talking about this stock. It continues to remain in the band. No sign of it coming out just as yet, and it could stay in the band for the next few trading sessions. That continues to outperform, even though that the Nifty is under pressure. So I'll continue keeping an eye out on this particular name. Back to you.
RBL Bank, thank you very much for that. Swiggy is now down close to about 3%, despite the positive announcement of monetization, raising 1,200 crore rupees with its stake sale in Rapido. Swiggy is down, and Urban Company hit a high of 201 on Monday. And since then, the stock has been seeing some profit booking. Mitesh is now back with us. Mitesh, that pullback is now being sold into.
Yeah, as I said, I think, you know, staying below 25,150 is something, you know, which is not keeping the market strong. So I think unless until that level is captured again, you might see the index, you know, go into some more, or, you know, lack this trend to continue on the upside. On the stock side, I have an estimate on Geo Financial. It's broken that base area of around 305, 306, just trading below that. In fact, 308 over 309. So keep a stop at about 309, look for a target of roughly around 300 on the downside over here. So might pull back and still extend on Geo Financial. And the second stock which I have on the radar, that's STBT as well on Mankind Farm with a stop at about 2542 and a target of around 2500.
Okay, all right, got it. Thank you very much for that. Mitesh, good to have your advice today, and we'll connect again with the market first thing tomorrow morning. For the time being, let's move on and also put the spotlight on some more stocks that have been in the news today, and they've been on the move as well. Bajaj Electricals was in the news because they're looking to take over the Murphy Richards brand, something which would be pretty well known to, you know, many in the country. Upasana, fill us in. The stock started with a big flourish in the morning. Now, of course, it's cooled off.
Well, the board has given its consent to acquire Murphy Richards brand rights in India and across neighboring regions from Glen Electric Limited for a consideration of 146 crores. Mind you that the company is associated with this brand, that is British brand Murphy Richards, since April 2002 through a licensing agreement for marketing and distribution in India. Now, company positions these brands in its premium category with products in kitchen, home appliances and personal grooming segment, which the company believes has a wider appeal and a higher sales growth as compared to other categories. Now, company continues to maintain its leadership position in the small domestic appliances category as well, and this strategic move is expected to strengthen its position in home appliances and consumer electronics portfolio. So summing up, overall with this acquisition, company will secure outright brand right in regions such as India, Nepal, Bhutan, Bangladesh, Maldives and Sri Lanka. So we can certainly see that this bodes well for the company, and the stock has been in the radar today since morning, up nearly about 4%.
All right, 2.5 now, so come off a little bit from the high point of the day. Upasana, thanks very much for that. Minda Corp is the other one on the back of 2030 vision put out by the management. And this one is holding strong, even though the market's come off. So does here with details. So,
So in today's week session, also one stock is holding the gains, that is Minda Corp, and that is on the back of Vision Document 2030 that company has released yesterday, and it has given some ambitious targets. On the revenue front, company is saying that by 2030, revenue might increase by almost 4 times to around rupees 17,500 crore from the current level of rupees 511 crore. On the margin front also, there might be an increase of almost 100 basis points to 12.5% from 11.4%. And on ROCE, company is saying that it might increase to 25% from the current level of 20%. And growth drivers, on the growth drivers, company has said that it will focus on premiumization. Kit value, it's looking to double in the next 3 years. And contribution part, company saying it will increase from the passenger vehicle segment. It will look to increase to 25% from current level of 14%. And in contrary, contribution from other segments like commercial vehicles, two-wheelers and three-wheelers will come down. So on the back of these factors, you are seeing a big move in Minda Corp today.
Indeed, thank you very much for that. A revenue scale-up of 3.5 times is a 28% top-line CAGR, and plus they're talking about margin expansion. Sudarshan, thank you very much for that. Get into a break. We'll come back with more on the markets. 10 minutes to go on the other side.
Welcome back. Markets again at the low point of the day, down 110 points or thereabouts. Mayuresh Joshi from MarketSmith India joins us on the show. Hi, Mayuresh. Good to see you in. Well, real estate, that's coming for some profit taking today. Even a company like Godrej Properties is now down close to around 5%. How would you approach, the real estate pack? Anything you like?
Afternoon, Nigel. Now, again, I think if you probably look at Q1 numbers across the real estate pack, I think a large part of the universe got impacted because of lower pre-sales. The second aspect also was that collections were more or less in line with estimates. And therefore, I think the expectations in terms of new launches, the pre-sales velocity, how does that pick up the expectations in terms of collections as well out of the existing projects at hand? And at the same time, I think what is the overall perspective that one probably looks at in terms of key areas? For Godrej Properties in particular, I think last quarter's numbers more or less in line with estimates. The collections probably came down around 20% year on year. 89-90% of their contribution came in from projects in NCR, MMR, and Bangalore as a region. And therefore, I think new launches in each of these operating markets with expectations of realization, growth, and collection efficiencies, the gross development value itself expected to be reasonable in the coming year as well. But how do all these factors probably stack up is something that the market would, and the street would ideally like to see. Yeah. So I think let's watch out for Q2 numbers as we see it in the management.
Mayuresh, Minda Corp, bold ambition for 2030. Had a look at it?
Yes. And again, I think FY30, I think the targets are very, very optimistic. Obviously, I think the expectations that they have put out in terms of the overall sales growth with margin expansion, debt reduction, the capex plan that they've probably put in place makes the street believe that the kind of numbers can be achievable. So, Rima, if you probably look at the auto ag space in general, I think the underlying thesis has been a large part of this auto universe is making its new products EV agnostic. So whether it's plastic products, whether it's mechatronics, whether it's the control systems, the sensors as well. And therefore, I think the content per vehicle is expected to grow significantly higher. And you would have seen that in a lot of management presentations across the auto ag universe. Four-wheelers content per car expected to go as high as 70, 75 or 1,000. Two-wheelers to 20, 25 or 1,000, which is a 3 to 4x jump from the current ICE vehicles that they're probably servicing. And therefore, when capacities start getting built up towards these new age products, incrementally, as numbers start coming through, auto ags will benefit quite significantly. So yes, I think Minda Corp, along with a lot of auto ags, you look at Lumax Autotech as an example, I think they've given a 20% rise, 20% in revenue, 20% in ROC, 20% in EBITDA margins. And therefore, I think a large part of this auto ag pool is probably looking at strong growth coming from OEM and strong pricing remaining within the replacement market as far as their aftermarket sales are concerned. So yeah, I think the momentum can continue. But again, these are long drawn out targets, which is going to take time as the transition happens towards EV in the next few months.
Yeah, no, got that, Mayuresh. Just a quick look at what else is going on. 2,000 stocks are down, by the way. 2,050 stocks are down on the NSE, and about 1,000 stocks are higher. So this is clearly gone the other way. Mayuresh, on real estate stocks, is there any particular reason why the index is down 2% today?
No particular reason. But again, Prashant, I think what you've probably seen in terms of fresh registrations that are coming through, I think last month, I think you probably saw for the first time as a trend, where registrations have probably got lower in an area like Mumbai, MMR region as well. NCR is still holding strong. But I think in a falling interest rate scenario, as we are ending that 6-year cycle, we are probably in the 5th year as we speak. It's a surprising data point because I think the stronger real estate sales that we saw for the better part of last so many quarters seem to be plateauing out, at least from last month's data. So this is a trend, which is something that the street probably fears, which probably might plateau out as we speak, in spite of a falling interest rate scenario. There is some element of concern in terms of, as I said, the new sales launches, the new launches that are happening in terms of the new sales velocity, collections, margins, and therefore the overall earnings growth.
Mayuresh, stay on, just counting down today's trading session. Tough one. Markets consolidated, but with a negative bias, lower now for the fourth trading day. The Nifty sheds 100 points, ending below 25,500, closer to 25,050. Sensex down 350 points. Mid-caps underperformed today. Mid-cap index down 1% with an advanced decline ratio, which had nearly 2,000 stocks in the red. On the way down, real estate took a big knock, 2.5%. Capital market plays weak. Autos on the back foot, retracing after last week's gains. And IT continues to see selling pressure. On the way up, you had power names. Power Grid, NTPC were the top two. Nifty gainers, HUL, Nestle. Add that to the list of gainers.
Yeah, but bigger sell-off in the broader market today, 1% lower on the mid-cap index. And today was one of those days where a lot of stocks, saw selling into news. Dilip Buildcon would be one of them. They announced an order win, 1,100 crores project in Kerala. Stock started off positive, but it ended with a cut of about 5%. Let's see what else was weak. A lot of real estate stocks actually had a very weak session today, especially the Mumbai-based realtors. Godrej Properties, 4% lower. Oberoi Realty, 3% lower. Lodha was down 2.5%. Even DLF was down 3.5%. So very, very weak session for some of the real estate names. Speaking about other key losers of the day, you have some of the Adani Group stocks coming in for a lot of profit taking. Adani Power, Adani Total Gas, they were on the downside. There's Gokuldas Exports, something like a Zen Technology, some of these defense names which have rallied hard. Today was a down day for many of them. Must end with Minda Corp in terms of positive reaction to news. It probably was the stock that really stood out, 8% up as the company has announced its Vision 2030. Well, the bell has gone, so we'll take your leave on that note. Thank you very much for being with us. But, all the updates coming up on the market action. Up next is Markets Forward.